Good morning.
Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock
Nathan, you could just set alerts. Set the alert on your YouTube, on the YouTube channel. It'll tell you when I'm live. It'll send you an alert. I'm looking at let's see. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Try that with the response.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock and trading podcast in my
Episode
ears.
list. Let me just make sure.
Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound.
Okay, let me just make sure everything is intact. Trendspider has a sale. Woo-hoo.
Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer.
And seen. I gotta go on my iPad so I can see what you guys see. So when it's lagging and blah blah blah. I do get quite a, by the way, eight people, 1 thumbs up. Come on. The first thing you do when you come here is hit thumbs up. Congratulations, Nathan. And if 59 is way better than 65. So, we're going to do some scans. Let's do some scans. Let us scan the core portfolio. Nothing in the core portfolio because I think everything's done. Let's do top stocks. Any top stocks? No. Let's do May 2025 buys. Anything in there? I don't think there's going to be anything in there. No. There's only a couple that I kind of bought. Let's look at energy names. Anything in the energy sector? That's a buy. Nope, nothing in the energy sector. Let's look at leveraged ETFs. Are there any leveraged ETFs that have a buy in the 4-hour algorithm? I know there's going to be watch lists and stuff like that, so there should be. Because I got alerts on 2 yesterday. 2 of them. In the afternoon. I posted them on Twitter, so they shouldn't be a shock to anybody. I wonder if I have to log out. I wonder if I've got to log out here. Sometimes they've explained to me why this happens. Let's see, spider sectors. There's only 9 of them there. Let us log out and log back in. And we'll go back to the scanner. And let's do spider sectors. XLB, XLG. XLG. Let's do leverage ETFs. Any? Yeah. Oh. We've got a ton. ETFs. COM, FAS, MSTU, MSTX, Nail, Nvidia, long, Robin, long, ROM, SPXL, SVXY, which is the inverse of the VIX, UDOW, which indicates maybe the VIX is going to continue to go down, UPRO, URTY, USD. Wow. Maybe that's why it was taking so long. Let's see energy names again. Devon. Yep. Both of those are good. Devon and SLB. SLB, I can't believe that's down at 33, to be honest with you. Let's look at the watch list. I mean, just ANET, BLDR, GLW, Granny, Hood, IWM, Lulu, MDB, which has earnings tonight, MSTR, MicroStrategy, and Net and TAP. Let's scroll down. It's almost the entire freaking thing. Pins. Oh, come on. POWL. Powell. Snapchat. SPMO. STRL. TEAM. Target. VRT. Vertiv. WC. The World Cloud. I think that's the ETF. Workday. Good God. I mean, we're in a bull market. Now let's go to the indexes. Before I do that, let me just go back and look at the core investments. Yeah, there's nothing. It didn't mess up. Let's look at index. Let's look at the Dow. Visa. Visa's on there. Home Depot. And American Express. Let's go look at the Nasdaq 100, which is going to have a bunch. Airbnb, AMD, CSGP, EA, Lulu's on our watch list. Micron, Onsemi, O'Reilly, Ross Stores, Starbucks, which is crazy at $86. I mean, at $82, that was a total buy. Take Two and Workday. Let's look at the S&P 100. I mean, that's a long list of 100 names. You've got all of those with an entry yesterday in the algorithm. I mean, that's just huge. You got Citibank, which Capital One, MasterCard, Lowe's, MetLife. Yeah. Wow. Okay. So we'll include that list in the newsletter today. That's a big one. That's just, whew. I'm worn out just looking at that list. Damn, man. Okay. So let me just delete some things on my desktop. So I don't mess up. Sometimes what happens if I don't delete yesterday's stuff on my desktop, then I wind up posting that. Then I get a message from somebody that says, "Ooh, you posted this." We will end today's podcast with how to invest in SpaceX and a couple of YOLO trades. HPE killed it. CrowdStrike killed it. And I repeat this, killed it, and yet is pulling back exactly where I said it was going to pull back to. I think you could start buying this one. Dan Ives is launching. I mean, he's taking the name from. Let me move this. Okay, I gotta move this one. I'm gonna move that. Oh, undo. Oh, edit. What? How come I can't do? Undo. Oh. Let's see. Let's see if this will work. I think I just messed something up on Apple. No. I think I just messed something up. Oh well. We're gonna miss stuff on Apple. Let me see if it took it out or not. Yeah, it did, unfortunately. Let me see. Copy link. Because I was gonna put in this. Yeah. I lost my note on it, but I wish I still had my note. I can't do the undo. Damn. Oh well. I'll put in my note. Momentum. It's the Mag 7 that I'm going to talk about. Like, why am I history? We're just gonna take this. There we go. Okay, so Webbush. Sorry, I'm kind of getting a little out of order here because let's see, Dan Ives. We're gonna delete this. Okay, and then 2 essentials, 2 keys to keeping the rally going. And then if you bought Alpha Picks this time of year last year, I mean, it's just, you know, we're going to go over small caps. So IWM, you know, we'll look at that because are small caps ready for a breakout? Maybe. Pinterest. I like what I read on Pinterest, and I did some analysis, and so we'll look at the 4-hour algorithm on that one because it works really well. We learned a bunch yesterday about just about stocks as a whole, because I think CoreWeave, I think HIMS, I think Meta and Constellation, I think those things worked it. This is the Apple portion that I was trying to get to because Apple got a rare downgrade. And I don't think that it's justified, although I do understand the reason. Magnificent Seven, they're powering through earnings. Tariffs are in the news. If you haven't watched this, this is a tariff and what it will actually cost, which was kind of shocking, which just kind of tells you, hey, it's probably not going to happen. Momentum is outperforming everything. This is, I'm going to play this video. This is how it feels in the market. We'll look at that one. Why I'm kind of unlikely to buy any indexes right now. And I know that's the title of this thing, but why I'm kind of staying away from them. Job sector performance. I mean, we talked about tomorrow's job sector, and then today it shows up light with the private stuff. Is this you? I mean, you know, again, is that you? How many times do you have to go through a pullback to understand there are times to buy? In the stock market. This is a Dumb Money podcast that they did with Graham Stephan. It was great. I need to do that one. There are a couple of, I'm just going to bring these up as well, a couple of podcasts that I was on. So I'll promote those. But yeah, Yeah, let's see. QQQ is down. I mean, it's even. It's dead even. It's dead even. So, now, I'm still waking up. Oh, 21 people, 10 thumbs up. Let's see. Let's check. I always do a barometer of how the YOLO kind of trade is going. And it's down just a little bit. I mean, that's my Webull account. You should have a Webull account. Oh, why is this doing that? Hold on. You're staring at my hand. There we go. I have the AI tracking on. So see, when I move, you move. To quote, I forget the rapper's name. I don't know why she's crying. Is it because she can't get it? I've got a sick little dog, by the way. She just doesn't feel well. We're going to the vet tomorrow. I don't think it's an emergency. Upset stomach, nausea, probably things like that. Apple's actually responding fairly well to that downgrade, to be honest with you. Okay, we're going to start out here. I'm going to start recording now. Good morning to everybody who said good morning. I'm starting a little late. Good morning. It is Wednesday, June 4th. I hope you're having a great day. It's hump day. We got jobs report tomorrow. A big show, okay? Just to point out, the end of the show, I will show you how to invest, an article of how to invest in SpaceX. We all know IPOs with a CoreWeave and stuff like that have come out. They've just outperformed. You have seen nothing until you've seen an IPO with SpaceX. And to get in before that, big chance. So wait until the end. We'll talk about why I'm staying away from index funds. I think that's the title of this one. Why would I? I mean, we'll go over that. We'll go over some stocks at 52-week highs. We'll go over momentum. We'll go over the Mag 7. We will go over some stocks that I actually do like right now. We'll go over what the market told us yesterday about being careful with HIMS, Meta, and Constellation Energy. Credo was a good one. I added a new stock to the watch list yesterday after doing a little bit of research. I like it. We'll talk about small caps. Two keys to the market continuing this, because we do have Broadcom earnings tomorrow. And we'll talk about CrowdStrike, obviously. We'll talk about all that stuff. I do want to point out, though, I was a guest on a couple of podcasts. So the first is Wealth Building and Day Trading, Gary Vaughn's Strategy for Wealth and Simplicity. It is Dustin's podcast. It's called The Wealth, The Picture of Wealth with Dustin Service. If you get a chance, go and comment on it. SS Jurdy is the only one who's commented on this one before. So go and comment on it. Say how much you enjoy it. I do think that was a great appearance for me, and I think Dustin did a great job of just letting me go, to be honest with you. And that's part of the problem is some people, when they interview me, they interrupt a little bit, and it disrupts the flow. I can talk. If you didn't know, I can talk. The second one is the Investing Experts. Did you survive the great crash of 2025? This has 5 comments. I haven't looked at them all. I will talk about them a little bit, and I'll respond to those folks in a little bit. But again, it was 2 weeks ago. I haven't checked these. I just was a guest. I will tell you, in a couple of weeks, let's see, Seeking Alpha will host a live event on June 17th. Featuring Steve Crest and guest speakers. I will not be one of those guest speakers as far as I know. They have not invited me. I don't think I'm going to be on there with Steve Crest. I need to invite Steve back on. But he will be going over top stock picks for the second half of 2025. So make sure you get your Seeking Alpha subscription, and you're able, if you get a free 7-day trial, you can join that one. There's a reason why these top stocks are the top stocks webinars are so heavily, because they outpace. I mean, let's just look for, I have the top 2025 stocks right here. Okay, on my thing, I can sort them by year-to-date performance. OpFi, 71%. AGX, up 59%. Boy, don't you wish you attended that 2025 Top Stocks webinar and just bought 10? Because there's 3 that are down. Okay, PayPal, Inta, and DXPE. 3 of them. 7 are up. 7% for Credo, 31% for EAT. 31% for CLS, 32% for Urban Outfitters, 37% for LRN, 59% for AGX. Again, this is a webinar that you want to get into. So I will post the link for it. Again, it's June 17th, so expect that one. Do you agree with this clip? I mean, this is the dumb money guys. You're not a hedge fund. Could you become in 2025? Go and watch this clip. I'm not going to play it on here because I might get a copyright strike. Who the hell knows? But it's what these guys would do to get rich, because they are saying 2025 is the time to buy in. I will give you some reasons why I'm a little bit nervous about this, but I do think you have the opportunity, because we all know back in March at $600, I'm an idiot. Why didn't I buy SPY under $500? And then in April, when it dipped back down below 500, is this you? Because again, April, maybe you didn't buy. Maybe it felt uncomfortable. But now you're back in May. Why didn't you buy it under 600? And if you just go to SPY, I mean, nobody's ever going to teach you about buying the dip, okay? But go to SPY. The 4-hour algorithm had you in several times. Did you make money if you bought it at 562 within a month? No. Did you make money when you bought it at 566 within a week? No. But you're up above it now, okay? I do think that 567 provides us some type of support in that range. Okay, the market is still good. It's not bad. But when the dip happens, don't let this be you. Now, I did write a note yesterday. My day was fulfilled. I wrote a note that Josh Brown is on Substack. I will include his Substack in the newsletter today. If you don't know and you want to subscribe to the Substack, okay, it's dailystockpick.substack.com, or you can go to Linktree. And it's down here. It is free during the week. Like yesterday, Tuesday Stock Surge, AI Music, Energy Winners, Jobs Report. That is free to read. You can go and read it. There's no paywall here. Nothing. But Josh Brown does have a Substack now. And it's good. We talked yesterday, and it was on the compound this weekend, about how the jobs report on Thursday is going to be key. Stock index futures give up gains as job data comes in cooler than expected. That was the problem. One of the most important catalysts for the recovery was that jobs report, which showed the U.S. labor market in a more robust position than previously thought. That was yesterday. The May ADP private payrolls, it will land before the opening. FYI, it landed. U.S. private sector jobs cools more than consensus in May. ADP jobs report. It missed the 110,000 that was supposed to be added, and cooling from the 62,000. It was 37,000. That's even down from April, which was low. So is the jobs market showing some weakness? Maybe. We'll know tomorrow. Remember, 255 is the key. If the unemployment report comes in with more claims than 255,000, that analyst on the compound this weekend told us, expect volatility. Expect volatility. And that's the key. So when I was looking at SPY, and why am I unlikely to buy indexes at these levels? Let's just talk about it. Because here I put in, you're about 2, maybe 3% from all-time highs. And when you take a look at this on a weekly basis, okay, remember, you have to make sure that somebody is in the market is going to pay you for SPY or whatever you're trading. They're going to have to pay you more than it has ever been paid in the history of the stock market when you get to all-time highs. It doesn't mean that you can't buy here for the long term. It just means you have to be selective and you have to know what your time frame is. But I will go over this in my thought process, why I don't want this, okay? Why I'm looking at, hey, am I going to load a couple $100,000 into VOO or QQQ right now? Well, no. These volume bars, okay, these are key. And these volume bars go all the way back to 2022, which was the high, January 2022, before we dipped when the Fed was actually raising rates. Now we're in a place where the MACD is under the oscillator again, and you have every indicator that maybe you could go for another run, even on the weekly. But why am I unlikely to do this? Well, be honest, the 4-hour algorithm got me in at 540. I put in a bunch of money at 540. And I didn't put it into SPY. I put it into VOO. Perfectly clear. I don't own SPY. I own VOO. I don't use SPY. VOO is probably the same thing, but because this tracks the S&P, and I want to make sure that I was the S&P, I think you're range bound between 5,000 and 6,000. On SPY, that's 500 to 600. Right now in pre-market on SPY, you're at 596. So can it go higher? Absolutely. But you're 3% away from all-time highs. So I'm looking at risk reward. If I'm going to assume that the all-time high is the price that somebody will pay right now, are we in a market that deserves higher than all-time highs? You've got Elon trashing the big beautiful bill, which is a key to this market. You've got the Fed currently not likely to cut rates unless something breaks like the jobs market. You've got Trump hating the taco trade and digging his heels in likely with tariffs and summer weakness. So why would I risk buying an index fund where I think the upside is 3% when I can get 4% APR in FZDXX? Now, could I get 3% in a day? Absolutely. But I am perfectly happy with, if we do see a pullback, trying to get in there. This market just doesn't feel good. This is the way the market feels. How it feels buying tech stocks like it's 2021 while Buffett holds cash like it's 1929 and the U.S. national debt is at all-time highs. That's not a stock chart that you see below. That's the U.S. national debt. So there are reasons why I just don't want to. Okay? Very simply. This doesn't mean I don't want to take risk on single stocks. But I'm watching single stocks like Microsoft. Microsoft's high is 468. It's trading right now at 462. I'm looking at QQQ, and that one, its high is around 530, 540, somewhere in that neighborhood. It's trading at 527. I'm looking at Nvidia, which just came off of great earnings, and their all-time high is 153. It's at 142. I trimmed at 150. I will be buying back if it dips down below 130 again. And I'm looking at Netflix, which I trimmed in the 980, 990 standpoint. I trimmed 50% of it. So I own half of it, but it's at 1216. Even some of the Seeking Alpha picks, which I will name right here, okay, that I own. I won't publish them in the newspaper. Well, you know what? I'll publish them in the newspaper. I'll give you a list. It's E, it's SCRL, it's MFC, it's Royal Caribbean, it's ATGE, it's AGX, it's Allstate, it's Sprouts Farmers Market. All of those are at all-time highs. So I've said it before. I'm looking at alpha picks, at changing the way I trade alpha picks. Do I want to trim those? Maybe. And part of the reason is because look at this. When you take a look at momentum, MTUM is the iShares Momentum ETF, okay? And you can look at the holdings. The holdings are Broadcom, Meta, Netflix. It's just what I went over. Berkshire, Walmart, they're all at 52-week highs. But when you look at this ETF, look at where it broke out and look at how much it's outperforming the S&P in the last couple of months. Momentum can take you to even higher highs, but at some point, either the S&P starts coming up to momentum or momentum starts coming down. And so I'm just a little bit cautious in this market. It doesn't mean I'm out. But let me make this very clear for those people who have, not as good risk tolerance as I do. I am still 85% in the market. Buffett is still 80% in the market. It's just historically, I've got some cash on the sidelines. So, and it doesn't feel good. Tariffs are in the news, okay? If you didn't know how they work, this is a clip from CNBC. You can find it on any platform that you want. I'll include the Instagram post. But they break down how tariffs work. And it's really, really scary. A $30 sweater goes up to $80 if the tariffs go into play. And remember, he hated that taco trade. He is going to dig in his heels. So where can you invest? Well, in my mind, again, the Magnificent Seven has powered through earnings. They outpaced the rest of the S&P by nearly 3-1. 3-1. Okay? Does that mean that they're all created equal? No. The quant says Alphabet's number 1, Amazon's number 2, Microsoft's number 3, even though it's at 52-week all-time highs. Meta's number 4, Nvidia's number 5, Apple, and then Tesla. Again, that's the quant. Pick what you want. Needham made a rare downgrade of Apple. This hurts. This hurts my soul. I looked at Apple in my brokerage account. It's down to like 40%. And it's the price. It's not because I've trimmed a ton of it. It's the price. When you go from 260 down to 200, I've lost a lot of money in this stock. Am I worried? Maybe. Martin cut her rating on Apple to hold from buy and removed her $225 price target. So she doesn't like $225. Martin said, noting that 170 to 180 is a better entry level for investors. That may be true. Apple is very expensive. Okay? When you go and you look at the quant, again, how do you evaluate this in Seeking Alpha? You go over here and you look at the quant. It's a hold. It has been a hold for quite a while. I mean, the entire chart here has been a hold since 191, which is way back in, let's see, that 1 year. 1 year, when you go to 3 years, has it ever, 3 years back here at 120s, it was a buy. But it's the valuation, and you can analyze it with AI. It's 28 times forward earnings with a growth of 4.91%. That's hard. But you've got next week, WWDC, I think next week or the week after. I mean, we're days away from it. And how to use ChatGPT and Apple Notes. Anybody that has an Apple device, if you're not using Apple Notes, oh my God, it is the most powerful. I take all my notes for this podcast. I am reading notes right now. And I use this throughout the day for different things. I throw it in there. And ChatGPT is coming to Apple Notes. This is part of the reason why I'm still bullish on Apple. Because they're not spending a ton of money on the AI features. They are basically integrating AI into this. I've seen recent reports that Perplexity will be included as the search for Google. Replacing Google as the standard search. That might hurt Apple because, again, Apple gets paid by Google to be that prominent one. But I still like Apple. It's just a stock that I think will hover around $200. And I think you may see even a breakdown. If we don't get big news from WWDC, if we get something like an apology that says, hey, I know we promised all this, but it's not coming this year, that is what the market could target onto. And then that woman, Laura Martin, the analyst at Needham, she might be right that 190 or 180 is a better entry point. But I would argue that I think the Mag 7 names, they continue to get bigger. Apple still has dominance. It still makes a ton of money. One that's not making a lot of money, but has been doing incredible, is CoreWeave. CoreWeave was up 25% yesterday. Okay? It rallied on the array of AI infrastructure stocks to climb higher. I mean, it is unstoppable. CoreWeave, let's go and look at it. Because over 1 month, it's up 195%. 195. It makes no sense valuation-wise. It's not covered by the quant. It's got a $72 billion market cap. When you go and look at financials, they make $2 billion in revenue. That makes no sense. None. The valuation, they're not making money. It's crazy. Their growth, fantastic. And that's where you're getting this run. Now, I will say, I am not getting into this one, but would I sell it if I owned it? Absolutely not. Would I trim it if I owned it? Absolutely not. It is too strong of a momentum play, and I think the market has locked in on this one. This is similar to Palantir. When I sold Palantir at 25, and then I sold it at 40, I was just playing some of the momentum, and I got scared. There ain't no diamond hands here. It's paper hands. So would I sell this one? Absolutely not. I would wait for some type of strategy that makes sense for you. Work it into a strategy. But CoreWeave is just a gainer that it's unbelievable. But what did the market tell us yesterday? Okay, I want to bring up CEG, and I want to bring up just a 5-minute chart of CEG yesterday, because we saw CEG, which is Constellation Energy, pop on news that Meta was buying energy from them. Okay, it popped 10% just on that news. But then it started to, the market started to rally. Hey, that's 20 years that they're going to buy that energy. Maybe it's not worth paying a 52-week high or an all-time high for this stock just based on that. Valuation matters. And at some point, valuation matters. You can see it. When the market opened, it just dumps. It's continuing to dump. Energy is the new gold, okay? But do you want to pay the all-time high up there at 330 for a stock that is a utility? Now, the 4-hour algorithm works on this one. It does. It makes you 275% versus 282%. If you were using the 4-hour algorithm, 210 was in. Now, I would have told you, once you start filling this gap and you filled it at 344, maybe it's time to actually trim at 344. You know, all-time highs. Again, all-time highs. The numbers do not prove me right. It's just more of a if you go and look, are people, good at timing things? No. And so if you trim at all-time highs, momentum typically will take you to new all-time highs. But it's hard for me to say I've got 200% gain in things like CrowdStrike. We'll go over CrowdStrike in a little bit. But you had HIMS yesterday, finally flashing signs of exhaustion, up 20% in the morning, and it closed red. Again, same thing as Constellation Energy. What's the market telling us? Maybe there's some exhaustion. But then you have Credo, which was up 15% and held it. When I was doing the podcast yesterday, it was up 10%. So Credo, unlike HIMS and Constellation Energy, this held it. Okay? This didn't hold it completely, but it didn't give it all up. Okay, do I think it's coming back down here to 63? I don't think so. But if it does, I'll be buying. I like this stock. The earnings were really, really good. So Credo, it's on my list. I currently own it. I own a lot of it. Pinterest, shares rise after JP Morgan's bullish rating. This is one. It trades really nice in the 4-hour algorithm. Let's look at it. You make 77% versus 36%. You win 52% of the time. 24 positions over 24 months. It just got you in. Just got you out of an 18% gain. Could we be going back to these highs at 38, 39? Possibly. Again, what's the quant say? Well, it says it's a hold. What does Wall Street say? They say it's worth $40, 21% upside. Sure, it's expensive. 22 times earnings, but forward earnings, it's 18. What's the PEG ratio? 0.56. I like it. I've added it to the watch list. I probably will be looking at buying this one at around that $33 mark. It's up a little bit today, but I added it to the watch list. Now, let's talk about small caps. Are small caps showing signs of a breakout? Well, maybe. This is, let's see. The Russell 2000 is attempting to break out of a 7-month downtrend, potentially signaling a significant shift in market dynamics, according to Jonathan Krimsky, the chief marketing technician at BTIG. It's down 5.2% year to date. Okay, remains stagnant since January 2021, creating a frustrating situation for investors that hold it. To say it's been a frustrating trade is likely an understatement for many. If you've held this one since 2021, again, it's been just stagnant. Small caps, not my thing. I'm not a huge fan of small caps. But when you take a look at the chart and you chart this against VOO, which is the S&P 500, DIA, which is the Dow Jones, and QQQ, which is the Nasdaq, it underperforms over 1 year by a lot. Does it mean that they can come back? Absolutely, it means that they can come back. Now, if you bought Alpha Picks 1 year ago, remember we saw that chart where IWM was up 2%. Alpha Picks is up 15% over 1 year. Again, beating the S&P. And Alpha Picks, the majority of these are small cap stocks. That's how good Alpha Picks portfolio is. I like Alpha Picks. I have money in Alpha Picks. I have 6 figures into the portfolio. Not into every stock, into the entire portfolio. It's a great, great thing. And again, it outpaces the S&P since its inception. You get 2 stocks, one on the 1st. We just got one a few days ago. You get one on the 15th, and they tell you when to sell. It's a rules-based portfolio. Okay, and you've seen me analyze stocks. Seeking Alpha Premium is what I'm using. And again, with the premium, you can get 7 days and $30 off, 7 days free. What I suggest is the bundle. This saves you over $159. And again, remember, June 18th or something like that, we have the Steve Kress top stocks for the second half. So again, I'm looking at the tools that I have and using them. What's the 2 keys according to JB Morgan for this rally continuing? It's basically AVGO and jobs. I mean, they must be listening to the podcast, because when you go to Earnings Hub, AVGO is Broadcom. That reports tomorrow after close. And they say that's going to be key to continuing this rally. AVGO is at all-time highs. All-time highs. 257.88 is the 52-week range. You're trading in pre-market at 258. Do I want to buy this one? Not right now. Even though Wall Street says it's a strong buy, their price target is $250. It's a little bit of an issue for me paying for something like that. But, we still see Dan Ives. I talk about him all the time. He's launching an ETF. He's taking after Tom Lee, who launched Granny Shots, which we have an entry in the 4-hour algorithm today. Dan Ives is doing an AI-focused ETF. It's going to be comprised of 30 companies under the purview of well-known, often loquacious tech analyst Dan Ives. Includes Nvidia, Apple, Microsoft, Google, and others. It's based on research. So if you watch Dan Ives with his brightly colored clothes, maybe that's an ETF that you want. But earnings last night, CrowdStrike, it fell. It fell after Q1 revenue. I was live on Substack for this one. I didn't like it. I told the story about my dad telling me not to sell it, not to trim it up at its all-time highs, which may have been a mistake. But again, they killed it. Okay, the guidance is what the problem was. That's the issue. For the entire fiscal year, CrowdStrike expects revenue ranging from 4.74 billion to 4.8. The midpoint was 4.77, is less than the estimate of 4.79. However, CrowdStrike said adjusted EPS will range from 344 to 356 with a midpoint of 350, more than consensus of 346. I think you can pick this one up. And how do we find a price for it? Well, maybe you have Seeking Alpha and you want to go over to Wall Street. They say it's worth 448. That's pretty damn close. Today, you're trading at 450 in pre-market. Does it make sense to pay 450? Well, your valuation is stretched at best. Okay? And we can take a look at the peers. I will give you the price that I think is a good price for it. But take a look at the peers. You got CrowdStrike, Palo Alto, Fortinet, and Zscaler. Those are the four, okay? The four right there. So when you scroll down here and you look at the valuation, 144 times for CrowdStrike, 60 times for PanW. For Palo Alto, Fortinet is 41, Zscaler is 92. Boy, CrowdStrike is super expensive. But then scroll down here to growth, okay? And you look at CrowdStrike at 29% growth year over year. Palo Alto is only 13%, okay? So you go up here and you look at the PEG ratio going forward. CrowdStrike is actually the cheapest with their growth. So while it's expensive, you're paying for the growth. Now, Zscaler is a whole nother story. I don't own that one. It's one that popped on their earnings because they're growing. Again, revenue growth year over year, CrowdStrike is at 29%. Zscaler's at 25%. The valuation is only 92. The PE, I should say. So I do think that Zscaler poses an opportunity. But for CrowdStrike, I will give you where I said yesterday that CrowdStrike would trade back to, and it's $450. How did I get that $450? Well, look back here in February. Where are we trading in February? $450. That was the previous all-time high. Remember the pullback strategy that I said yesterday? Go and look at yesterday's newsletter. Go down to the bottom. Okay. There's a perplexity under the education section. There's a break and retest. This is what's called break and retest. When you pull back to a previous all-time high and you retest it, I think it's down there somewhere. It's in a newsletter. It's one of those. But that's a break and retest. And so for CrowdStrike, if you just think that we're going to hit 450, it's a time to start adding to it. Yes, it's expensive, but it's growing. And here, the 4-hour algorithm. You can wait for the 4-hour algorithm to tell you when to get in if you'd like. Because over 22 positions over 24 months, you make almost as much as buy and hold. Okay? This is risk tolerance. Your average win, 13%. You're winning 59% of the time, almost 60%. So maybe that's the way you want to do it. Now, other earnings, Hewlett-Packard killed it. Hewlett-Packard absolutely killed it. It's up 6% in the pre-market, okay? After solid Q2 beats. Let's just look at the chart on this one. Before we go into the fundamentals on this, let's look at the chart. The 4-hour algorithm had you out, 28% gain. You know, you were up, you closed yesterday at $17.68. You're at $19. There's a gap up here at 24. Maybe that's where you go. Does the valuation hold a $24 price? Well, look at the 52-week range between 11 and 24. I would analyze it with AI. I would look at it. Its valuation is not expensive whatsoever. It's the growth that's killing it. But they had very good growth. Now, it's been a hold in the quant for quite a while. Okay? 3 years. It was a buyback here at 15. You're trading at 17. So I think that one, if you'd like it, again, find something that does it. Now, we're going to look at yesterday's YOLO trades. MCTR. Okay? I know nothing about this company. It's not covered by the quant. It was just an IPO back in January. It was up 571%. So if you had found this one moving and you said, hey, Trendspider, I want things that are moving during the day. I want to look at this. We can go back, look at this, okay? Yesterday. We can just go back. We'll turn on after hours. Yesterday, you could have bought this at $7.57 in the morning. Okay, you had confirmation. It went all the way up here to 11. Then you lose confirmation, so you sell it. Okay, gain confirmation again at $8. You get up there at 15. You lose confirmation. You sell it. You buy it back because it gains confirmation. You're all the way up at $38. $38. Now, when you look at this, the 52-week range, you're trading at $38 in pre-market. It's up 17%. It's huge. It's moving. This is what momentum will do for you. Okay? FNMA, one of our other YOLO trades. This was down 13% yesterday. Do you hold it? Maybe you want to trade it. It pulled back below 10. It's below 10 right now. It was up after hours to about 10%. If we just go and look at FNMA. Okay, let's look at the after hours in 5 minutes. Let's look at it. It's in a downward trend. I mean, that is clearly not a stock that you want to buy until it changes the trend. But the MACD super low. The RSI super low. It's juicy. These are YOLO trades. And now, for you guys listening for this whole thing, let's go over ways to invest in SpaceX before it goes public. You got a couple of ETFs. You got Space. You got Space, which is the ETF. Space ARKVX is one. Scottish Mortgage Investment Trust. You've got a couple of others. XOVR, which I've gone over before. Destiny Tech 100, DXYZ. They all hold it. The other portion that you may not know about is Google holds a bunch. Bank of America holds a bunch. It gives investors access to these things. So there are ways, if you think that CoreWeave is crazy, if you think some of these IPOs that come out are crazy, wait until SpaceX goes public. Just wait. I mean, seriously, just wait. We saw what Tesla did over the years with Elon Musk. This is going to be the most overpriced IPO you've ever seen in history. But it's space travel, and it's Elon Musk, and it is perfect. I don't know when it's going to go public, but if you'd like access to it, buy Bank of America, buy Google, buy one of these ETFs. They all will have access to it. Now, again, I consider that one to just a YOLO trade. But let's talk about some stocks that have an entry in the 4-hour algorithm today. XLB, the material sector. We know that Trump is pumping this one up. Algorithm had you in at $79. You're at $87 right now. The 4-hour algorithm makes you 35% versus 14% if you buy and held. Pretty good. Now, I'm a large cap tech guy. XLG is one that I currently hold. 19 positions, 53% win. You make just about as much as you do buy and hold. Could have gotten in at 44. Looks like we're going for another run. Okay, this has a second entry right here. It met all the criteria. Remember, this is a technical strategy. So it doesn't care about the price, doesn't care about anything other than the technicals. XLG is the top 50 in the S&P 500. Now you got one that reports earnings tonight. MongoDB. Got you in here at 166. You're trading at 196 right now. Okay, going into earnings. The MACD is down right around the oscillator. The RSI at 64, a little bit oversold. If we look at MongoDB's earnings tonight, what are we expecting? Let's see. Oh, I got to refresh this. Why is this not pulling up? MongoDB. So earnings per share estimate, 66 cents. What they report last time? $1.28. They killed it last time on earnings. Let's look at the chart and how did it react? Gap down. They killed it last time. They gave poor guidance. That's a gap up there. We're going up towards that gap. The gap fill is to 257. Could it do what other stocks have done, which is, hey, on this earnings, boom, we got AI, we're going in. Could be a big one. You've got a ton of leveraged ETFs, by the way, a ton. There is a list of about 60, maybe 30, 40 stocks that I have with entries in the 4-hour algorithm. Leveraged ETFs, probably about 15 of them. One that I got an alert on yesterday, MicroStrategy. 4-hour algorithm. Again, if you don't have the 4-hour algorithm, you might be missing out on this. This makes you 2,103%. See it right there? Over 24 months. Let's just see. What's 1,000 times 2,103%? $21,000. So if you had $1,000 and you just traded the 4-hour algorithm on this one, you'd have $21,000 over 24 months. Again, not saying that it performs, that well in the future, but your average win is 69% on this one. You win 41% of the time. It saves you from huge downturns. Just got you in at 390. You're trading at 383. Is this one of the 41% wins or one of the 59% losses? I don't know. MicroStrategy is just one that trades. And by the way, the alerts that I got this morning, MSTU, which is a double leveraged ETF on MicroStrategy, or MSTZ. They're both double leveraged ETFs on MicroStrategy. Okay? Well, MSTZ is the inverse. MSTX, 3907 right there. Okay, you got Robinhood, which we talked about. ROBN. We talked about it yesterday. Is this going for another run? Do they get included in the S&P on Friday? Does it go for it's at 52-week all-time highs? ROBN says, hey, this is going for another run. It's a double leveraged ETF on Robinhood. So over 4 months since it's been out there, ROBN has made you over 3 positions 176%. You win 2 out of 3 times. So it's not like you're winning a ton. It got you in here at 11, got you out with a loss right here. I mean, this one went all the way up to 17. Then it got you in at 10. It got you out with a 3% gain. Then it got you right back in at 11, and you're sitting there all the way up to 30. 31.94 right now. So that's the 4-hour algorithm. How do you get the 4-hour algorithm? You go over to Linktree, Trendspider, sale right here. They're on sale, $50 a month. Again, if you can't make $50 a month, then A, you're not trading enough, or B, you're not trading enough money. So again, these are expensive tools. I did plenty of years where I didn't pay for tools, whether it was Seeking Alpha or Trendspider, but I was a paying customer before I became an affiliate. That's important to know. These are tools that I paid for myself. I don't pay for them now. I do get compensation when you sign up. But there are so many features to these tools that I don't go over. So you can get a free trial of Seeking Alpha. If you want the Seeking Alpha Premium right there, 7-day free trial, that's the third link. The bundle's the second. Alpha Picks is the fourth. My newsletter is the fifth. The sixth one is Webull. This is my YOLO account. I have Nvidia. I have Tesla. I have iBit, a large portion of iBit. Okay. $12,000. I started with $1,000 in there. It's $12,000 right now. So I have Webull. I will talk to you tomorrow. I probably won't be live for MongoDB earnings. Maybe I'll go live tomorrow for AVGO earnings. But that's all on Substack. So if you're not subscribed to the newsletter, go and subscribe to the newsletter. I will talk to you tomorrow. See you. Bye. Kerry, I don't know if I'm actually going to buy it. I don't know if I'm actually going to buy it. I think it, is it today or tomorrow? Let's see. It's offering 9.7. June 4th. So it's today. I have not put in, start trading on June 5th. So the price is going to be set today, but it'll start trading tomorrow. I will get an email today from Fidelity offering me shares at the price. So here's the problem with buying shares this way, where they offer them to their high net worth clients or whatever. I think they offer them to everybody, but you're ranked. Whether you get in or not is depending on how much money you have with Fidelity. That's the way I understand it. I have never done it through Fidelity, and the reason I haven't done it is you have to hold for 90 days. And if you don't hold for 90 days, Fidelity says, hey, you're no longer allowed to participate in IPOs. So I don't know that I'm necessarily that gung-ho on Circle that I need to buy it before it goes out to the public market, because I don't know what the appetite in the public market is for it. And that's been my reluctance to do that. I have most of the IPOs that I have traded, I have bought once they open up. And that's the way I've played it. That's the way I've done IPOs when I've wanted to, and it hasn't been a lot. There have been several that I've done it like that, and I've been fairly successful because the volatility. I mean, you can make a lot of money volatility wise. I remember Meta was one that I traded on the volatility, and I did really well with Meta. Now the problem was that I probably should have just bought and held. I think the IPO was at 40. So I don't know that I'm going to do it. I'd probably have to see, and I tell this to people all the time. 6-4 pod. The problem I have with trading is that I do this podcast during the time when I should be trading. 6 to 9:30 is prime trading hours. By the time you're hit 10 o'clock, your volatility is over. For the most part, you can find stocks that are still volatile. So if I'm day trading, that's the time when I would day trade. And that's the time when I would get in and out. It's also the time when I look for opportunities. But I do this podcast. So typically when I find opportunity, like Pinterest interests me. I mean, pardon the pun. But I found pins yesterday. I didn't want to buy it on this particular one. It just got over the 200-day, kind of sitting there. It's at 33.29 right now, so it's a little bit above where the algorithm says to get in, which I don't have a problem with, but I do have a problem with the 67 RSI. I like it to be under 50, and when I look at this weekly, I kind of see the top at 40, and I'm like, okay, if I were to buy it, I'd want it to go to 40. Is that enough risk reward considering where the indexes are? And am I better off buying this one or adding to a current one like Credo? So that's where I typically kind of sit at. I'm looking at my account, my big account. Yeah, I'm up 0.34. Nice 5 figures. Huh. Okay, I'm going to go do the newsletter. I hope you guys have a great day. By the way, I'll say good morning to a shout out to Nathan, Rosa, Wendy, Donnie, Rosa, Mark, Carrie, Chris, Sean, Olga, Carrie. shout out to you guys. I appreciate you listening. The trash guys, man, these trash guys, I tell you what, they don't get enough credit. These guys work hard. Those guys work really hard. I always walk out to say thank you, but okay, it's exporting. I will talk to you guys later. See you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.